You start, Rob, for something different.
I'll start today. Welcome everyone to Dornbush Download, number 162.
Yes, welcome.
How'd you go in the Melbourne Cup yesterday, Dan?
Mate, cleaned up. You know that, Rob. You're jealous.
I am jealous.
Won the, got second and third. There you go. Jagged it for a year.
I was only in the office sweeps, come up empty-handed once again.
It's a shame, isn't
For me it is, yeah.
it? Yeah. No, it's a good day though, Rod. We always have a lunch here in the boardroom and relax for a couple of hours and watch the race. It's good. Look forward to it once a year.
It was. It was a nice little luncheon, that's for sure. It was good for rekindling to win the cup.
There you go. Rekindle. What's rekindling?
Rekindle.
Very good, Rod.
Can I segue from that?
You can.
If I can rekindle what happened back in January 2008.
Wow, that's going back.
That what happened was the ASX 200 was at 6,000 points.
Yeah. And
what happened yesterday? It pushed through 6,000 points for the first time since January 2008. So and first time since like post GFC as well. So it was a good day on the markets. It's been a psychological barrier for a long time. It's got there close over the last couple of years, but bounced back down again. So yeah, it's still trading above as we go into air at the moment this morning. So hopefully we can stay above that 6,000 points.
Yeah. Can I be a bit of a downer on that?
Certainly.
In the last decade, November's only been positive twice. And in the last 70 years, I think, third worst performer. Mm-hmm. So let's hope it can hold 6,000 rather instead of falling away under it. Yeah, sorry to cut you off, but it's been a bit different, hasn't it? The ASX 200 has really been lagging the All Ordinaries, you know, and the 200's really got the financials in there. So whereas the All Ordinaries goes from 300 down to 500.
That's right, it's broader.
So it's got the energy stocks in it, the mining stocks, small caps are in there as well. So it really hasn't been the banks working for us at the moment. It's been those other companies that have or those other sectors that have pushed the market along. Yeah,
true. Yeah, well, that's exactly right. The All Ordinaries pushed through 6,000 points, a few days before the ASX 200. You're right. That's exactly right. But anyway.
Let's hope it's a good November.
Like you say, November's traditionally or historically a bad performing month, but December is a better month. So trying to put a positive slant on that.
We get the Santa rally.
So get the Santa rally. So
And just on that, I wonder then whether we should be thinking about buying financials. You know, maybe pick them up now for the dividends. Too late for NAB unless you get it today, I'd say. ANZ and Westpac you would have to buy by Friday because they go ex-dividend on the 13th being Monday. So if you wanted the dividend, you'd have to pick it up by Friday for those two companies.
Yeah, certainly. Like, you know, there's a pick up the dividend, but obviously it goes ex-dividend and the share price drops away, but then can hold it till it bounces up again.
Yeah.
So, for sure.
Which is the idea, yeah.
Can
I
just say one thing about that pushing through the 6,000 points? A reason for that, the Reserve Bank met yesterday. Everyone was at the Melbourne Cup festivities, but the Reserve Bank had their meeting yesterday and held interest rates at 1.5% for the 15th month in a row. So they're just saying that they were, I suppose, a little bit upbeat in regards to economic growth, slowly recovering. Inflation's not out of control. It's at 1.8%. Their target band's between 2 and 3%.
Yep.
On the negative side, household debt's still high, and wages growth is very slow. So there's some pundits out there saying that there mightn't be a change in interest rates till the end of 2018. So we'll just have to wait and see. But there's nothing spectacular happening in the economy. It's just limping along or chugging along, but without being spectacular. So
it's going to be interesting to actually see, Rod, isn't it? Because wages are ticking up in the States, inflation's starting to tick up in the States,
it is.
You know, and they're talking that interest rate rises will happen in the States. So if that happens, that'll push up the cost of borrowing for our banks, you know, for the likes of Transurban and those infrastructure companies, Sydney airports as well. So, but that's going to put a bit of pressure on out-of-cycle rate rises again. So where the cash rate might say at 1.5%, we might see the rates sort of creep up a little bit.
That's exactly from the bank, so that's right. Yeah, the US economy is ahead of our economy in regards to their recovery. So we're in the early stages of recovery where the US economy, there's some good statistics coming out of the US economy that their recovery is going to continue. So, but that is one concern that interest rates could be
Goes
lifted
out
by
of-
the out
out
of
of
cycle interest rate rises. Anyway,
Yeah.
stay tuned about that one. What else have you got, Dan? Have you got?
I've just got one company to finish off with, Propel Funeral Partners. Way back when it was Macquarie, clients took on InvoCare, which are funeral homes. Propel's coming into the market. They're going to list on the 23rd of November. Unfortunately, we haven't been able to get it to secure any in a float, but it could be one to consider on day one. It's trading around $17.05. I think it came on the boards at like $2.50. They've got 270 funeral homes. Propel's going to have 80 funeral homes. The profit margin would be very similar though. The profit margin for InvoCare at 23%. Propel's going to be at 21%, or that's what they're forecasting.
Okay, so similar. Yep.
So very similar. So from an ageing population, a growing population, that's one of those industries that's
The theme's there to support it. That's
the
exactly
theme
right.
is there to support it. Yep.
Yeah.
So if you'd like to talk more about that, please contact your advisor.
Hate to say, but they're always going to have customers, aren't they, Dean?
Yeah. Yep. And so's the taxman.
That's exactly right.
Well, that'd be us.
On that note,
Thanks very much.
thank you.